All right. So in the next 15 to 18 minutes, I'm going to just try to break down what the blockchain land banking is all about and what we call the sorry method. Now, first of all, thank you for responding to my advert. My name is Joseph and I am an entrepreneur, a businessman, and I'm also a crypto enthusiast. Now, I want to start by making a comparison. I don't know if you know anything about long-term investing. Like in Nigeria, we have a solution called Sukok. Okay, Sukok offers 17% of whatever you stake for 7 years. So every year you're paid 17% of your investment, and you can actually decide to break down that investment and get paid every 3 months or every 6 months. It's completely up to you. But again, it is 17%, and then you put down the money for how long? For 7 years. All right. Now, today I'm going to be showing you a project called Orizon. Okay. Orizon does not offer you any fixed rate, as it were. Orizon's API, the APY, is dynamic. And dynamic basically means it constantly changes. Okay. So if we started out with 1,400, okay, and every 3 years it reduced, okay, and every 3 months the APY was reducing until it reduced by 75%. Okay, we will end up with this. Now, if it reduced by 50% over the span of 3 years, this is what you'll end up with. And I'm trying to give a realistic case scenario. In other words, I'm saying that I don't want to let's not say that the APY is going to remain the same. Okay. However, you need to also know that in crypto, when the AP when people increase on the platform, the price does what? The price goes up. So when the people increase, the APY will reduce. That is how this AI that is running this system operates. But also the value of the token is also going to go up. All right. So in other words, what you might lose in terms of the reduction in APY, you will gain with the increase in the price of the token. However, let's not even assume that the token is going to go up. Let's just assume that the token price remains fairly stable as it is right now, and the APY is constantly reducing. This is what you will get. So again, market conditions and market forces can make that to be different. I'm just giving you a worst case scenario. Now, I know that for most of us, we've lost money on crypto projects again and again. So I'm starting out with what the offer is, and then let us begin to break this thing down to show, first of all, why can you even trust this thing in the first place? Okay. First of all, how do we know that it's not a scam, and how do we know it is not a policy? Okay. The first thing I think you can do is to go to the largest crypto auditor on the planet. So if these people tell you that this project is on the blockchain, okay, and they tell you that this is a real blockchain project, then you listen to them. Why? They are the largest security auditor on the blockchain right now. As far as Web3 is concerned, nobody is bigger than these guys. The market cap they have accessed is $520 billion, and that is no joke. Okay, they are known. Cetic has been highlighted by Apple, by Ripple, by Ledger, by Line. I mean, they are. This is a world-renowned company. Okay, so any serious crypto company comes here to be audited. Okay, they have been highlighted by Bloomberg, CBS, Forbes. Every goddamn person is talking about the work that they are doing. Cetic co-founder, blah 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 blah. Like, they have news constantly everywhere. Cetic joined Hong Kong Web3. Cetic signed Web3 partnership. Cetic founded this. Financial Cetic collaborated with this. United Nations Cetic commits to strengthen global Web3 with UN. So they're even working with Interpol. So these guys know what they are doing. Okay, they have something called Skynet Crypto ATM fraud reports. Like, this is a big company. Okay, and the goal of everything is to keep users safe. They've audited 90,000 security, like they've reported 90,000 security audit findings. Okay, they have, according to them, they've been able to protect 100 million users. In other words, the projects that they've done, all the projects they've audited have gotten 100 million users. Now, I've spent a complete 2 minutes talking about Cetic because I personally am going to be using them to make some of the research we are going to talk about this project, because after we talk about the money, we need to find a way to know if this project is worth putting our money in. So I'm going to be taking my reference from Cetic, okay? Because Cetic, if Cetic tells you that this project exists, this project is a real project, then you listen to them. So now all you would need to do is you come to Skynet written, click on it, and when it opens up, you're going to search for Orizon, okay? First thing I want to show you is that Orizon is a spotlight project. It's a spotlight project. They have been listed on, by the way, this is the only 15 projects in the entire world that Cetic says are AI driven web innovators. AI driven innovator, meaning their smart contract is being manipulated by AI. They are using AI in their smart contract to produce better results. Horizon is here. Horizon is what? Horizon is number 9 on the list of the top 15 projects in the world that have been highlighted for what? For AI innovation. So we're going to come back to what Cetic says, but let's go back and continue what we're talking about. So continue what we're talking about. Why do I know that this is not a scam? Because they have been checked by the protocol, not by people. So this particular project, again, most scam projects have something called hidden ownership. The liquidity is controlled by insiders, and they have ability to freeze withdrawals. That is what happens on most scam projects. On this particular project, okay, ownership has been renounced, meaning the developers cannot control the system anymore. They've renounced ownership. They've said, we've removed our privileges from the project, from the smart contract. Now the smart contract is just on the blockchain, and in this particular case, they are on Binance Smart Chain. Okay. Number two, liquidity in this project is controlled by what they call the protocol. It's called, they use something called POL, that a company called Olympus DAO innovated in DeFi 2.0. DeFi means decentralized finance 2.0, and POL means protocol owned liquidity. Means that the smart contract, okay, controls the liquidity, the money that they use to start the project. That on a normal day, somebody will go and remove that money, or the developer will go and remove that money, and then the whole project will crash. The liquidity is locked into the smart contract in something called a treasury. So the liquidity is not controlled by what? Whales, is not controlled by insiders. So the smart contracts are open, and the smart contracts are what? Audited. And I'm going to show you they are open and what? They are audited. So if we come here and we click on Horizon to see the detail, what is going to happen? It is going to open the report. And this is a report you should come and check out. Okay. By the way, according to this report, look at their code is open source, is verified on the blockchain explorer. Okay, it is verified. That is why you see check. Anywhere you see green, it means they passed the test. Where you see something like this, it means that you should take notes. See that there's a something you should take note of there. So there's red like this, and there's what? Good. So it's something that you should know. It's something that you should understand. Okay, so this is it. This is the report. Everywhere you see green is a check mark. Okay. Now the external core risk always happens on a project like this that is being AI driven. If you go to the first AI driven product, you see it. External core. Why? The AI is making an external core. This project also has what they call mint function. Why mint function? Because it is a minting project, and I'll explain to you what it is when I say it is a minting project. Because on this project, we don't make money when the price goes up or when the price comes down. The project is not about price going up and price coming down. This project is about the price being stable. We make money through stability. How? We stake. All right. So this has been audited by Cetic. It is listed among the AI driven blockchain systems. It is in the top category. It is not an ordinary project. So you must understand that. So it removes the project from the common scam category. Okay. So they are a spotlight Web3 innovator. They are not lying when they say it is a AI powered decentralized financial engine. Where did I get this from? I got this from Cetic. This is how they are described on Cetic. It is an AI powered DeFi engine. Okay. Orizon connects artificial intelligence tools to a decentralized financial engine where on-chain yield is generated not by speculation but by AI doing real work. It is transparent, sustainable, and permissionless. Permissionless means that nobody can come and block you tomorrow from withdrawing your money. The smart contracts run the system, and AI is what is governing the operations of that smart contract. All right, and there are different things. This screenshot is still from there. As you can see, the screenshot is from there. Okay, and I'm going to talk about some of these things as we go along. So in this kind of project, nobody can pause, nobody can freeze, nobody can blacklist, nobody can do withdrawal blocking. All right, and like I said, they've passed the test on all of these points. As you can see, check. Can they retrieve, can they collect back their ownership? No. Is the balance modifiable? No. Is there a hidden owner? No. Is there a creator? Does the creator have money? No. In fact, if you come here, look at owner holding ratio. The owner is holding 0.00%. So this is not something where the owner has a hidden hold that is holding some tokens. No. The owners don't even have a hold. They've renounced the project. They say ownership renounce. Yes, they have renounced the project. Ownership percentage, they don't have any percentage. Okay? It is not a honeypot. It is they can't post your transfer. They can modify the tax that they've set. The tax that they've set now is 5%. Okay, good. So can the developers run away with your money? No. Why? Because the liquidity is locked in the smart contract. Okay, the ownership privileges have been renounced. They are not an owner. There's no admin access. They don't have what they call the admin access, like access to that back end to come and say they want to withdraw money, or they want to pause the system, or they want to blacklist users, and you can check them on the smart contract. So this is the smart contract of Ori. How did I get here? I came to this is the project Horizon. It is $55 right now. As you can see, the price has been stable. It's AI that is doing this stability. This is the graph over the period of 1 year. You will hardly see projects that have this kind of stability. Now we're going to come to why the price is like that. But first of all, let's if you come here and then you come to Explorer, okay, Explorers, and you click on the BinanceScan.com, it will open the project up here. If you come to holders, I want to explain to you that thing I said that the money is controlled by the treasury. The money is held in. So usually when you go to most of these crypto projects, okay, you are going to see the holders. In the holders, you're going to see wallets like this, and you see how much the person is holding. Now, usually you will see a wallet like this, and when this person removes money, the entire project will crash. Okay, because the price is going to go down. There's no way somebody will remove 59% of the liquidity and the system will remain the same. No, the price is going to crash. So many crypto projects today are pump and dump projects. They will put money like this. When other users come and begin to put money, the price will go up. When the price goes up, they will increase, their share will increase. They might 2x, 3x, 4x their share. They will remove all their money instantly. And when they do that, the system will do what? It will crash. The price will crash. So because of this, many crypto projects cannot last long. They cannot be scalable. Okay, is they only make money when the thing pumps and when the thing dumps. And people have used this to keep making money on the blockchain, and we celebrate them. There's no problem with celebrating them. Okay, so the number one way of making money on the blockchain right now is through pump and dump scam, because for the most part, many people are using it to scam people. They are creating coins that are fake, and those fake coins, not even, I will not say fake. The purpose of the coin or the project is just to cheat people, and the purpose is that when people put money, the price will go up. So the people who know when the price is going up, that have that privilege information, are the people that enter early. The price goes up, and then they sell. They get the signal also to sell when they're supposed to sell, and then they sell, and then the price crashes. But the people that lose are the people that don't know what is happening on the back door. Now, in this project, if you come here to this biggest wallet and click it, just put your cursor here, you see that it is saying what? Contract. So contract here means that the money in this project, this 59%, is held by the smart contract. It's not held by an individual. The first holder, look at the person that is holding the highest money here. This is a holder. This holder is holding what? 0.0114%. This is what this person is holding. That's what the highest holder as of now is holding. Okay, the rest, the first 10 wallets in this project called Ori on Orizon, are all locked. These are This money is locked in the protocol, in the smart contract. And remember what we said, they have renounced access to what? To the smart contract. They can't get it back. All right. So they cannot remove this money. So they can't do what they call rock pulling. They cannot rock pull anybody on this project. So they cannot retrieve ownership. Okay. There's no hidden owner. Very important. So can the withdrawals be blocked? So look at it. It says check if there's a hidden owner that can manipulate the contract, even if ownership appears to be renounced. The answer is they've passed that test. Okay. So they don't have hidden owners. Okay. Is there a proxy contract? No, they've passed that test. Check if the balance can be modified. They've passed that test. Check if the contract allows owner to withdraw assets. No, they've passed that test. They can't withdraw that money. Check if the token has a backdoor to regain access. No, they've passed that test. The token does not have a backdoor to regain access. Check if owner privilege has been renounced. And you can also see it here on the blockchain. How do you know? Come to the blockchain, come to contracts. This is the chain. This is on the blockchain explorer. And this is how you know a project is on the blockchain explorer. You should be able to put the project, what do you call it, address, contract address, and it will show you the project on the explorer. Okay. Come to read contract. So I came to contract, I came to read contract. And then under here, you come to owner, look at admin role. Okay, when I click on admin role, look at what I'm seeing. I'm seeing this code. This code means not found. You can copy it and put in ChatGPT. You can take this, put in ChatGPT and tell ChatGPT what does this mean. It will tell you. Okay, it means not found, not available, does not exist. So there is no owner here. This is, and I'm checking on Binance Smart Chain because this project is a project on Binance Smart Chain. Now I know there are some people that are fanatical about projects that are on their own base network. Anyway, we're going to come to that story another day. Why that is not necessary. So is the project verified on the blockchain? I just showed you. I checked them on the blockchain and they are there. Is the project open source? Yes, the project is open source. They've passed that test. Can the project self-destruct? No, because some people can create a project to self-destruct and then run away. The project cannot self-destruct. Who is saying all of these things? The people that are saying it is what? The largest blockchain security auditor. The largest blockchain. So if SETIC tells you that they cannot run away, you don't need to take my word for it. I am not a security auditor. SETIC is the security auditor. Okay? So what is the answer? Whether they can run away with your money? No, they cannot. The system has been coded into the smart contract such that users can always withdraw. There is no centralized authority to freeze your funds. Okay? Withdrawals follow what they call a vesting structure, which I'm going to explain. And it's not a restriction, it's a risk control. So let's go into how this system works. How do I make money? You make money by what? Staking. Remember, they've told us the AI does real work. This is not about speculation. The AI does real work that helps to keep the system stable. So you make money by staking and you earn rewards. That's why it is a minting token. You buy the token, you stake the token, and then you earn annual percentage yield on the token. And then at the end of the yield, whether it is 90 days, 180 days, or whether it is 360 days, you withdraw the token and then you convert it back to USDT and you get your money. Now, unlike pump and dump, in this project, you are not waiting for the price to spike. You are making money how? By staking. So you increase your holding of the token, you withdraw it and get a higher figure. Okay. So you are earning from the system itself. This is what it looks like. You are the user, you take your USDT, you come here and you swap it for what? For Ori. Then you stake your Ori in what they call the decentralized app. Now, remember, this is decentralized finance, just like a real financial institution. At the end of your staking duration, 90 days, 180 days, 360 days, you are paid your yield. But you cannot take your yield out automatically. You take it out per day over a period of time because the system is built to avoid pump and dump. There are many mechanisms in this particular project that is regulated by AI for one purpose, to avoid pump and dump and to keep the platform stable so that there will not be price spikes, so that the price does not just skyrocket and the price does not just crash, which is what happens to most projects. Okay, so what is APY and why is it high? APY is what? Annual percentage yield, your return in 1 year. So example, 1,300 APY means that your $100 will become what? $1,300 in 1 year. If this APY is sustained. Okay. Now the APY is high because this project is what? Early growth project. It's in the growth phase. The incentive to build the ecosystem participation, that's why it is high. And it is also a treasury backed reward system. Now, I don't think it is high. You know why I don't think it is high? Because the people that they learned from, the people that they got the base model that they are using, this model that they are using, they got it from a project called Olympus DAO. And Olympus DAO has lasted for 5 years. Remember, they were thinking of what they are going to do that will last for a long time. Olympus DAO has lasted for 5 years. Look at it. Olympus DAO, this project is 4 years and 10 months. So they learned from this project and another project called Origin LGNS. When this project started, they were giving 100,000% return on investment. Okay, as you can see, in the last 7 days, they have transferred how much? $28.35 million worth of this project. This project is still paying till now. People are still cashing out till now. In the last 7 days, $28 million has been transacted on this project. How old is the project? 4 years and 10 months. 4 years and 10 months. It is still running and people are still transferring their tokens. Now, what will even shock you is that in this particular project, they did not renounce their ownership. They still have ownership, but they did not scam anybody. Okay? They are balanced. Look at, they have a hidden owner. They have hidden owner. And in this project, you can see their tax is modifiable. The other thing you see here is that they have the external core rigs also because it is a minting project also. Okay. Now, let's go back. So Orizon, in Orizon's case, Orizon has renounced ownership. Okay. So that project lasted 5 years, 4 years and 10 months. So Orizon said, wow, what did they do? And Orizon now learned about what they call protocol owned liquidity from them. And then they use that as their base model where money is locked in the treasury and cannot be pulled out. And when I mean money, I mean the liquidity that is used to build and start the. It's like you want to start a bank. There's a certain amount of money that CBN is going to demand. Okay, the central bank is going to demand that you have a certain amount of money locked down before you can start a bank. Why do you need to have money locked down? So that you can facilitate transactions. So that if people, it's like someone that is doing, what do you call it? Someone that is doing money transfer or money conversion, is converting money from multiple currencies. If all he has that he's holding, he has $10,000 and he has 1 million naira, okay? And somebody now comes and say, I want to convert 10 million naira. He cannot convert 10 million naira. He doesn't have it. Okay, not okay, not that I want to convert. I have $100,000. Okay, $100,000. I want to convert it to naira. He doesn't have. He only has 1 million naira. How is he going to do the conversion? So the bank expects you to have some initial capital, okay, to be able to facilitate transaction. There's a minimum. They don't know how many users you are going to get, but there's a minimum amount of money they feel you should have locked down somewhere to be able to facilitate transactions sustainably. Okay, and I hope you know, if everybody goes to the bank today, any bank, to go and collect all their money, the bank will have a challenge. And banks are folded up before, and the CBN could not pay the people that lost money in the bank. Yeah. Somebody say, oh, they will pay back, they will pay back. My dear, CBN was not able to pay the people when banks crashed in this our country, for example, in Nigeria. So is the APY fixed? No. Why is it dynamic? The AI does not promise what it cannot deliver on. So the AI adjusts the APY based on number of users, market conditions, treasury capacity, and other AI-driven algorithms that help to keep the price what stable. That is why you see the price you saw. So this avoid collapse caused by what? Unrealistic fixed reward. Many projects collapse because the reward is fixed. You tell everybody we'll give you 20%, 200% in 30 days. You cannot maintain it for 10 years. It's not possible. It's not realistic. Okay? So the AI manages the reward. As users increase, it manages it and adjusts the reward. If users decrease, it adjusts the reward. As market condition changes, it adjusts the reward. The AI is running the show. And this is not talk. Remember, on where? On Cetic. Cetic says, Cetic has named this project. They named the project as a Spotlight Web3 innovator. They have accepted that this is a AI-powered decentralized engine. The auditors have accepted that Orizon connects artificial intelligence tools to a decentralized financial engine where on-chain yield is generated not by speculation but by AI doing real work. So AI is actually working on this project. Not because I said so, but because the auditors, that is what they have said. Okay, so the question is, how long will it last? So, what will stop this project from crashing like others? I've told you number one is what? Protocol owned liquidity. Funds are owned by the system, and I've shown you how to confirm. So, you can go to any project, go to the project on the blockchain, come to holders. If the number one holder looks like this, then you already know that if they pull that liquidity, everybody will start crying. If you see a contract, now you are not going to see this on CoinMarketCap. You have to come to the particular blockchain explorer and check for holders. If you see a contract in front, that means that this money you are seeing here, 59%, is not held by an individual, it's held inside the smart contract. The smart contract is controlling that money, and the money is locked to the smart contract. That's the big difference. Okay. So where did they get this idea from? Olympus DAO. So the money is not held by wheels, it's not held by investors. The money is held by the system. Okay. Now, vesting. This is another thing that helps the system from crashing. Why would this project not crash? In this project, you cannot just come and take out your money. When I mean take out your money, not your capital. Your capital you can take out immediately, but the money, the reward that has been created, generated by the system for you, you put in $10,000, and in 6 months you have gotten $6,000 extra. You can take out your $10,000 immediately and you swap it at 5% back to USDT. But you are Ori that you have gotten that is worth $6,000. You cannot remove it immediately. You break it into any of these days. Either you say, I want to take it in 15 days. So you divide it by 15 days or 45 days or 100 days. You break it into any of these days. If you want to take it out in 180 days, it is free. I will not say it is, yes, free. If you do 45 days, you will pay 20% tax. So you're going to be paying 1,200. So you'll be left with $4,800 worth of the token. Okay. So your withdrawal would now be the $4,800 worth of the token. Okay. $4,800 worth of the token divided by 45 days. So you'll be taking out $106 every day. Okay. That is a bonding mechanism also to keep the system stable. So early withdrawal incur token bonds. It reduces supply also and stabilizes the price. Now, the other thing that is done here to stop the project from crashing like other projects is what is called the bond mechanism. Sorry, the liquidity bond mechanism. What's liquidity bond? If you go to a forex exchange holder, okay, like I said earlier, he has $10,000 and he has 1 million naira, and you go and tell him, I want to change $20,000, okay, into naira. He only has 1 million naira, so he cannot help you. So now, in a case, remember, many of these platforms crash. Why do they crash? They crash because the platform can no longer pay people. So in this case now, in a situation where the platform, what they call the DEX, decentralized exchange, you have money in the exchange, you have maybe 10,000 ori, but you want to convert 10,000 ori to USDT. That means the platform should always be able to pay USDT. Because if the platform cannot pay USDT, what is going to happen? Withdrawal has stopped now. People cannot withdraw money again. Even though you have $10,000 worth of ORI, you can't take it out because you cannot convert it to USDT. It is inside the DApp. You can't take it out. So that's a problem. So in that kind of situation, the system automatically generates something called a liquidity bond, where when it sees that the reserve, it doesn't wait for the problem to happen. It sees that the reserve is low, it is going to trigger the liquidity bond that is going to allow people to come and begin to buy the token at 50% off. Why? It needs USDT. The platform needs USDT. So it will begin to sell tokens at 50% off. All right. When you begin to buy at 50% of, what is going to happen, it is going to combine that token you have, that the USDT you brought, with Ori. So for every uh, uh, um, Ori USDT it buys, it will split it into USDT Ori. So USDT Ori means it will now pump USDT Ori into the DEX. Why is it doing this? So that if you want to swap from Ori to USDT, it can give you USDT. If you want to swap from Ori, sorry, from USDT to Ori, it can also pay you in Ori. So it will do a 50-50 conversion and put in for every 50, for every one Ori, okay, it will match it with one USDT in such a way that you have USDT Ori in a 50-50 split. That is what will power the decentralized exchange where people are swapping. But this is appearing because the liquidity on the platform is low. So it needs to sell at a discount to get more liquidity into the system. Are you getting how this works? So why is this done? So that the community can buy at a low rate, okay? So that it can get liquidity, okay, to pump into the decentralized exchange so that it can continue paying people. Are you getting the idea? Good. Now, people are going to buy, remember, because why will I buy at a lower rate? I'll buy at a lower rate and stake. Because if I buy at a lower rate and stake, and I'm still staking at the high percentage that they are giving, that means I can make a lot of money. Okay. The second project that did this thing, they call themselves Origin LGNS. Origin has been in the business now for 2 years and 1 month. Okay. When they started, they were giving 3,000 APY. Now their APY is 800. So their APY is not still bad. Okay. Now, the other mechanism that prevents this thing from crashing is what they call the reserve bond. Another reason why many projects crash is because a point comes where they have minted tokens. They minted too many tokens to the point that the price has just become useless. Okay, it has created inflation in the system, and the circulation is too much in the market. Now, what this does not just mint tokens anyhow. No, there's a supply that is available in the system per time. And the token is not just minting and being minted. No, the supply that is available in the what they call the treasury is what is used to pay people for their interest that they are getting from their yield. Okay. However, in a situation where the available supply in the DApp, what they call the decentralized application, is getting low, and the AI sees that, wow, the number of users are large, but I have in my reserve is not enough to pay everybody at the end of their yield. The AI would also trigger what they call the reserve bond. What does he want to do the reserve bond? People are going to buy the token again at discount price. But this time around, for every one USDT that is purchased, the system will mint one Ori. So for every one USDT, it will mint one Ori. So it will keep this mechanism active until it is able to bring in enough USDT. Okay, enough USDT to mint enough tokens to be able to pay, and that is to be able to pay users their yield interest. Are you getting? So it will mint. So this system does not just mint tokens randomly. No, it mints token with strategy and then pumps these tokens into the DApp, and then the DApp is now able to pay the yield to the users, and the users are now able to come to the decentralized exchange and change it and cash out their money. Now take note, every Ori that is purchased, whether with the liquidity bond or with the reserve bond, can only be withdrawn in 5 days linear release. It's free withdrawal, but it's 5 days with linear release, meaning it will be given to you over a period of 5 days. So you bought 10,000 Ori. That means you are getting 2,000 Ori a day in 5 days. Okay, so that's how the system works. So why is this vesting thing that we're talking about important? Because if everybody comes to withdraw at once, what happens? Even in a banking situation, is that the system will crash. No bank will survive if everybody withdraws at once. No bank will survive. So with vesting, withdrawals spread over time, and the system avoids what they call financial shock. All right. If you do 15 days, there's a high burning requirement. You need to burn tokens. If you do 180 days, you take out everything for free, but you are paid daily. And I like the daily system because that basically means you have a system where almost you are making like you're being paid daily. It's like a daily income for you. Everything just depends on what is coming to you. So what roles does do AI play in this system? It adjusts the APY dynamically, it controls the token supply, it analyzes user behavior, and then it maintains price stability. This is not a marketing AI, it's an operational AI. So is this claim, this thing I just said, is it verifiable or is just a claim? I've said it, it's verifiable because Cetic has audited their code, their smart contracts, 130 smart contracts have been audited by the AI. This project has been listed on the AI driven innovator. And this has been seen by what? 14,827 people so far. So this project is not just a roadside project on the street. Okay, it's an innovative project. Why is the AI better than human control systems? And you see, this is where they differ from the platforms that they were modeling. They were modeling Olympus DAO. Olympus DAO was a human control system. Origin LGNS was a human control system. So they had to react slowly. Decisions are emotional and they are also driven by need for personal gain. With the AI, you've removed emotions already. AI is processing data continuously, AI is adjusting price continuously, and AI removes bias. There's no bias, there's no mago mago, there's no politics because it's AI that is running the system. So AI is making decisions at the spot every day based on market conditions. So if you go to the DEX, to the DAP, you will see the price of the token that is per day. The AI sets the price per day. All right. So the system becomes more stable and adaptive. Stable and adaptive. The next one is what is the risks? What is the risk and reality? Okay. Now, first of all, I will say here is that you still need to do your own research. Okay. This is a crypto project, it is market driven, and this particular project is what they call an early stage system. Early stage basically means that it's in its beginning phases. Nobody has done anything like this before. They are the first mover, so there are still some things we cannot predict. However, the risks that we can predict can say, okay, maybe market conditions can change, maybe adoption is another issue in crypto. The project is sustained by users and adoption and trust. Community trust is what regulates crypto projects. So the token demand also, if people demand for the token, buy the token, hold the token, it will also help the system to be stable. And this is the reason why Orizon has different projects that they are coming out with, also different AI projects. Okay, so there's a payment gateway that is being built right now. There is a card that is being built right now. The AIL, what they call LLMs, have already been built and has been integrated into the system, but they've not yet started charging for it. They'll soon start charging for that also. So they are building real world utilities. Between now and 2028, there are several real world utilities that they are building into the project. Okay, so today, right now, while I'm talking, $100, which is like 130 something thousand in Nigeria, for example, in Lagos, okay, it's like if you're lucky, you get a flight fare for that rate. Okay, you get the flight fare for that rate. So that is what you pay for flight. And if you do a return flight, you're paying like maybe $200 or $300 in many cases. Okay, so if you put in $100 as your risk, for me that is really not risk, because in Nigeria, for example, if you are a serious person, you already know that that is like the price of the cheapest flight fare today. So that you cannot consider that as a big risk. So I put $100 for my child. I put $100 for every child, which is what I'm doing. Okay, $100 for every child, and you leave it for 3 years. So what did you really lose? You are still going to spend that $100 on frivolous flight fares that is not going to profit you anything. So at the end of the day, okay, if you look at the risk versus reality, I can still say it's not so bad. Okay, because if all you invested was $100, I mean, so in this case, the risk is basically just based on what you actually invested into the system. Okay, so can the price still drop? Of course, even though the AI is avoiding volatility. But if you come, for example, coin market cap, okay, and you come here, come to 24 hours, for example, okay, you see that there's fluctuation in the price. Okay, come to 1 week, You see that there's fluctuation. Come to 1 month, you see what's going on. But when you come to 1 year, you see stability. So the price has just been fluctuating around 50 to 55 to 58 and back. It's just been fluctuating in that range. And I don't know what the AI is doing very well, but the AI is the one running the smart contract. Okay. So, and they also have multiple mechanisms in place to do what? To mitigate pump and dump. So, pump and dump does not affect this project the way it affects other projects, because pump and dump is what kills many crypto projects. Okay, and then here you have a treasury that holds assets, and it has mechanisms to reduce panic selling. So of course, no system can eliminate risks completely. I don't know what the risks are right now. I don't know, because this is a new project. It's a project that has not, like, nobody has done what they are doing before. Okay, but the strongest communities, okay, on the blockchain are backed by trust. People willing to buy, willing to hold, and even when it is time to sell, they don't sell everything, they still hold. So when users hold and refuse to sell, the platform does what? Thrive. So you can see the price. So what if many people want to claim or sell their ori and leave the platform? And that's another thing that the system avoids, because many times tokens and coins are destroyed by what they call panic selling. You see that the price begins to come down, everybody begins to rush and sell. That's panic selling. You are selling because you're afraid that the price will crash. So that's panic selling. So you want to pull out your money so that you don't go at a loss. But in a system where the price is stable, there's no need for panic. Because the price is not skyrocketing out of control, neither is it crashing out of control. The price is stable. So because of that stability in price, you can sleep well in the night and allow your money, your stake, to keep compounding for you, knowing that when it finishes compounding, the money I'll be able to withdraw will still have value because the price is not spiking. You see, so in Horizon is not praying that the price of the token will get to 8,000 per unit. No, it's not praying that the price of the token will get to 1 million per unit. That's not what Horizon is trying to achieve. Horizon is trying to achieve stability. They are not trying to achieve pump and dump. So they are not trying to grow the price to a ridiculous rate where it will now become very expensive so that they cannot take out all their money and run away and become billionaires. That's not the plan. The plan is to have a system that lasts for long. The model is Olympus DAO and Origin LGNS. Olympus DAO is now 4 years and 10 months. That's almost 5 years. So this project already is going to do 5 years because Olympus DAO does not have what they have. Olympus DAO does not have the referral system that Origin LGNS brought, and Olympus DAO does not have the AI mechanisms. It doesn't have all the mechanisms they have put in place. They did not have vesting, they did not have all these things that they are doing to avoid pump and dump. Olympus DAO did not have. Olympus DAO only had the protocol owned liquidity. Okay, so what's the long-term opportunity here? That's what I'm calling the blockchain land banking. And what we say by sorry means stake ori. Okay, so you enter early when the skyscrapers has not yet come, when the all the utility systems have not yet come. You enter early so that when the price grows, when the APY grows, you enjoy also. Okay, so the value will grow over time, and this is not dependent on quick flips. So this is like buying land before development has come to that area, and then you sell when the place is more fully developed. And you must not sell everything. You can still have a property there because it's a good, you know that this place will keep getting better. Okay, so what is the realistic potential? I've shown you $100 can become $132,000. That is if the APY declines, okay, declines by 50% in the next 3 years, and we are able to keep the price at 55. Now, ideally, what normally happens is that when users increase, so in the next 3 years, the goal of this company, the goal of this project is to accumulate 2 million members. Okay, 2 million members holding the token means that the price of the token will appreciate. 2 million members holding and staking means that the price will appreciate. So if even if the APY reduces by 50% or by 75% over the next 3 years, this is the potential result. This is $100 investment. $100 can turn to $52,000 in 3 years. $100 can turn to $132,000 in 3 years. My question to you is, do your children deserve this? Do your children, if you're someone that has kids, are your children worth more than $100? Should they have an investment that is worth more than $100, or is $100 enough? That's my question to you. Or are your children not even worth, they don't deserve to even have $100 in this project? They should have nothing because you're afraid of loss. Is your fear of loss so big that you say, no, my child should not have even $100 in this project? So, my goal is to tell people to have a stake in this. Buy land now when land is cheap. Okay, the price of the token is low now because there are less users. As users increase, the price will go up. But take note, the price will not spike. This project does not do price spiking. The price goes gradually in a way that you might not even notice. It's like how a child grows, that you will not even notice that the child has grown, but the child is growing. That's how growth is going to take place on this project. It's not going to spike. So, because the system is trying to avoid panic, it doesn't want panic. Okay, so early users will enjoy the high APY phase. They enjoy low entry price. Now you can $100 is going to buy you two tokens. A time is going to come where $100 may not even buy you one token. Okay, so you can get compounding effect over time. Late users always have reduced upside. This project just landed Africa. It just landed Africa. It's not even up to 3 weeks in Nigeria. Okay, so the higher entry price means more users increase token price. Okay, and less compounding effect, because if you buy at a high price, your compounding effect will be low. So what do you need to get started? How much do you start with? It's up to you. There's no fixed price. You can say I want to do $10. It's up to you. You can say I want to do $100. It's up to you. But I'm advising parents, have something for every child in this protocol. Have, if you don't tell me that your child is not worth something, don't even tell me that one ori is too big that you cannot do for your child. You can't do 55,000 for your child. It's too big. You are not being serious. Okay, so let's think in terms of not 55,000, sorry, $55, okay, which is like the cost of one ori right now. So I believe if you are someone that have children, invest for them, okay? And you should be willing to lose. We spend more money on birthdays. Okay, we buy them toys that go bad, that get spoiled. We pay for food and cake that they eat and excrete out, and we spend much more money on these things. We spend much more money on their education. Okay, yes, education has a compounding effect also, but we don't invest assets in these children enough. So this is a call that you should invest assets in your children beginning now. All right. So I think start with $100 to $500. Okay. Take out capital in 6 months. Okay. If you want to, or you leave it to run. Okay. And then if you want to take out your capital, you invest your profit. In 6 months, you would have 2x or 3x your money. It's not a pump, it's not a what do you call it, get rich quick scheme. Okay. So what strategy work best? Stick and compound. Okay, avoid short-term withdrawals, and then use the longer vesting period so that you don't lose money. So you can put 10K, keep it for 6 months. That's what, 16,000. No, in 6 months it's like 30,000. 20 something to $30,000 is what it will be. Remove your 10, which you remove automatically. The remaining one, allow the system to pay you daily for 180 days. That now becomes like a cash flow system that can fund everything. It can fund your house for a long time, fund trips, because $20,000 taken out over 180 days is that's a lot of money being paid to you every day. Yeah, you get. So if you do $20,000 and you take it out in 180 days, that means you are removing 111,000 $111 a day. Okay, that's like 130K daily. I mean, so that's enough to say, okay, for so need, okay, that money will just be going there, 130K every day. There are so many things you can pay for with that. All right, or you can use shorter vesting period if you're afraid. Okay, because again, this is not a what quick flip system. So finally, who is this for? It's for long-term thinkers, long-term parents, long-term thinking people, people who are tired of pump and dump. investors who understand compounding. If you are tired of pump and dump, because pump and dump does not affect this project, okay, and you are looking for something that will last long, not short-term things, okay, so it's for parents thinking of long-term high yield investment for their children, parents who want to leave a legacy for their children, okay. This is not for short-term traders, it's not for people looking for instant cash out, and it's not for people who are unwilling to take risks or unmanage or manage their risks effectively. So if you are watching this video now and you want to make progress, you want to go ahead and you want to get started now, all right, just use the link in the description, all right, and let's start talking. Thank you.